The 68-30 vote on the Genius Act marks the first time the Senate has passed major legislation to regulate digital assets. Now, stablecoin issuers like Tether and Circle already hold nearly $200 billion in short-term treasuries. Some say that could double or top $1 trillion in 2 years. The upside, while more demand for T-bills could mean lower borrowing costs for the government and consumers. But not everyone is convinced. Well, joining me as stablecoins are moving center stage is John Motzel, head of Americas at Kaiko. John, happy Friday. Thank you so much for joining me.
Thanks for having me, Remy.
Well, of course, all focus was on the Genius Act, and now it does move to the House. So in terms of innovation, what are the next steps here, and what does this mean for the landscape?
So I am not a poli-sci major, but it needs to go through the House, and I believe they have their own bill outstanding right now that could be passed, but it looks like the Genius Act should follow through. I was actually down in DC this past week, and I was there for other reasons, for research and for educational purposes, but the Genius Act did dominate the majority of the sessions down there. And in terms of innovation, this could create more market clarity and more entrance to the crypto space, because USDC will be a great settlement piece. As you can see, more transactions will come to market as a result of these stablecoin transactions.
And speaking of stable coins, it was only a few weeks ago that we had Circle go public here at the New York Stock Exchange, and since then we've seen the price of that stock skyrocket. So we've seen not just a double-digit percentage gain, but also triple. So where do you go from here, and what do you make of the valuation and where the price of the stock is? Well,
the stock will grow exponentially as the adoption of stablecoins increase, and especially with the passing of the Genius Act, we'll see growing adoption of these stablecoins that are covered under U.S. regulations. So if you look on a few charts, you'll see that stablecoin pairs to USDC are growing exponentially over the past few years. We expect that to grow more and more over the next couple of years, especially as more tokenized securities come to market. So on your screen you can see there's 908 total spot pairs and 89 perpetual pairs that are trading against USDC right now. The perpetual market is another interesting piece where we are seeing extra focus by the CFTC. There's a bill being passed right now, or request for comment for perpetual or 24-hour trading. And on your screen you also see on-chain transactions that are growing significantly. But I really like this chart because it also showcases some of the major events that occurred over the past couple years, such as SVB, the FTX bankruptcy, as well as the Terra Luna collapse, where these highlight also some of the risks associated with on-chain transactions where there could be potential depeg. So this drew light to regulation, and so with the regulation, people are feeling a little bit more confident about these on-chain stablecoins.
Yeah, and John, you just gave us an overview of what we've seen across the crypto landscape over the course of the past several years. So as we move forward and as we keep a close eye on DC, I know you just mentioned perps right now, but give us an overview and what it means for retail investors out there.
Retail investors is growing activity. Retail investors will have access to more and more trading strategies, especially with like perpetual futures. It's a more unique approach that not everybody's familiar with. I just warn that we should be careful with what we're investing in, but growing demand in stablecoins will just create more global acceptance of cryptocurrency trading.
And ever since Circle went public, we've been hearing more about stablecoin. So how could stablecoin market action actually affect what's happening in treasuries?
So in treasuries, that is one of the parts of the Genius Act is that there needs to be a one-to-one holdings in the treasury of these stablecoins, so it can be cash or cash equivalent, and one of those is U.S. Treasuries. So there will be growing demand for U.S. Treasuries for these the treasuries of these stablecoin issuers, and as more issuers come to market, there might be greater demand for these U.S. Treasuries. Yeah.
And John, finally, before I let you go, I do want to ask you about what we've been seeing in the crypto major Bitcoin. So we are off all-time highs, and we are hovering right below the 106,000 level on this Friday morning. But given all the inflows, the multi-billion-dollar inflows we've been seeing in ETFs, why is the crypto major itself not rallying?
Well, it's just typical price action. I don't like to speculate on what the price will be. I let the professionals do that. But in terms of what we can expect, I think we'll just see growing adoption, especially as more acceptance, regulatory clarity comes in DC. One of the things I'm tracking is with the passing of the Genius Act, we should see more bills come to law around market structure, and as we get more guidance around market structure clarity, then you'll see more adoption of Bitcoin as well.
Well, we have about 30 seconds here, John, so as we head into the second half of 2025, there are a lot of factors, whether we're talking about macro geopolitics, that could potentially affect the crypto landscape. So what are some major catalysts that you're paying attention to?
Well, so everybody's been tracking the ETF approval, so once we see more acceptance of staking ETFs, multi-asset ETFs, multi-asset indices, we'll see growing adoption for the U.S. market, because this is the language that the U.S. understands and the market understands globally. I would also like to stress again that with the passing of the Genius Act, it opens up the Senate and the Congress to pass more legislation around market structure. Market structure clarity will be the catalyst for growth in this space. We saw it happen in Europe at a certain scale, but once it passes in the U.S., it's to the races, in my opinion.
Okay, John, well, great to have you back here at the New York Stock Exchange. As always, thank you so much for sharing your insights and your perspective.
Thank you for having me, Remy.